What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Bitcoin still just chugging along between the 34 to 35K area. Now, obviously something that some old school Bitcoiners might point out is that this does sort of resemble that dreaded, Bart Simpson pattern, right? Where it falls straight down and it's just kind of like this is his head, right? Are we going to get that this time, or is this just consolidation continuing to the upside? Well, obviously yesterday we had the Fed come out, FOMC, and of course they decided to leave the rates unchanged. So Bitcoin did in fact, you can see right here, actually put in a slightly higher high, even higher than this crazy pump that we got right here, right? So, having a look, what are some of the things that we have on our side? Well, we did in fact get the hash ribbons buy signal, right? Also over here, we have had the guppy move into this sort of cyan color, right? Generally speaking, once it flips green, that's pretty much confirmation that we are in full on bull mode. You can see right here, we did get the flip, but we have not confirmed in the green just yet. And also having a look over here, we are attempting to flip the EMA ribbon to the upside, which, as you guys also know, is a phenomenal bull run indicator as well. We are so close, but I do have to say, guys, this price action definitely has everybody feeling like this legend.
No way. No.
So what are we all thinking right now? Is Bitcoin starting to get a little bit overheated, or is it just beginning? Well, I do want to talk about one indicator that actually has flashed an extremely rare signal. So we're going to have to talk about what that means. I also want to discuss what's going on with the institutions. Do we have any evidence that the institutions are actually in? Well, I want to show you 6 charts today. Make sure you stick around for all of them because they are definitely leaving some massive clues as to what the institutions and the whales might be looking to do right now in the background. Now, of course, it's not all sunshine and rainbows, especially in the US. We have Elizabeth Warren coming out yet again with her anti-crypto army, and Gary Gensler and the SEC striking yet again, this time PayPal. But there was something that happened. It's happening right now in the background, and I'm not seeing a lot of people talk about this, but you're going to want to stick around because if I was Gary Gensler, let's just say I would be a little bit worried. So we're going to talk about all that today, key levels to look at, and if that sounds good to you, you know what to do. If you're not subscribed, definitely consider it. I want to start off with a few things right here. Number one, this is what we need to talk about. So if you come over here and you have a look at Tether, right? So this is just the past 180 days. And you can see that it did have a little bit of a dip right here, a little bit of a sell-off. But we know that when the market cap of Tether gets higher and we start seeing more Tether get printed, well, what does this usually mean? Well, I'll tell you if you don't know. Usually this precedes huge price moves. And this means that now these investors are essentially holding this dry powder waiting to pounce on potential dips. The only question is, will they actually get it? Because as you can see right here, Bitcoin on the exchanges, I'm probably in the way right here, but you could see it is basically at a low since the beginning of the year. So this is basically the beginning of the year, and you can see with the exception of this right here, it's essentially just gone down. So Tether printing, Bitcoin leaving exchanges. Well, I think you guys know what comes next, right? Also, not to mention the fact that we have massive open interest. Now, this open interest is a bit of a tell depending on which way the markets are going, right? So when we're in a downtrend, you want to pay attention to the open interest because it could tell you when you're going to look for major sell-offs. Now that we've started a bit of an uptrend, if we look at the area that we are right here, which is, it's around 35, billion, whatever you want to call it, So having a look right here at the interest, you could see that at these levels, okay, if we take, this area, what happened? Well, you could see the Bitcoin price overlapped with the green, which is, I guess they're taking it from Binance right here. And, you can essentially see that when we get to these levels, right, in an uptrend, we continue the uptrend, right? Same thing, we continue the uptrend, right? Same thing over here. So is this basically proving to us that we're looking for a continuation? Well, the hilarious thing is that 88.5% of the Bitcoin supply hasn't moved in the past 3 months. Wall Street is going to have to really pump this thing to get hodlers to part with their coins, right? So again, you're seeing the liquidity crisis. You are seeing Tether skyrocketing. Oh, and here's another thing. If you want, look at this chart right here. And this is just from yesterday alone, okay? And we're talking about the institutions. So Kraken, which is a very popular exchange. I actually really do like Kraken personally. As far as an on-ramp, off-ramp, I prefer them actually over Coinbase. They experienced their third largest outflow this year, with approximately 75 million leaving the exchange in a fascinating deviation. This departure was accompanied by the second largest inflow of the year, a hefty sum reaching about $100 million. What's going on with all this money coming in and flowing out and coming in? Well, they said that it was primarily driven by large investors or whales, while the outflows were characterized by transactions ranging from, okay, now you tell me if this is an institution or if this is an individual, 1 million to slightly less than 10 million. The average person is not buying and selling and trading between $1 and $10 million. So these are obviously big players, either high net worth individuals, institutions. It could even be BlackRock, right? Accumulating potentially for the ETF. Also last week, Crypto.com saw its most significant influx in a year, reinforcing the unprecedented surge of capital mobility on the crypto exchanges. And here is yet another proof, okay? So we know that GBTC Grayscale is the closest thing really that the institutions at this point have, right? Without a spot Bitcoin ETF. And you can see that the discount is approaching a 2-year proximity to the net asset value. So this is crazy, guys. This is all the evidence. If you just look at what we're seeing, I mean, I know there's still doom and gloomers out there that are saying, yada, 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 recession and crash and all this stuff, but the charts are not telling us this, right? And why is this happening? Well, Mohammed El-Erian was over on CNBC Market Alert, and he's over at Aliens. And, they were asking him essentially about what's happening in the traditional markets. And I'm just going to let him pretty much explain.
I'll give you a couple of points of pushback on that. First of all, people are reluctant to be buyers. Governments are reluctant to be buyers unless they look at the potential for conflict around the globe. Geopolitics may dominate and push them to a position where they say, we're looking for a safe haven. The U.S. Treasury is still going to be that, correct?
It should be that, but let me give you some numbers. Before the conflict started in the Middle East, the 10-year Treasury was at 480. Today it's at 497. And we still face the risk of escalation of that crisis. There's been two big puzzles, and they speak to how unsettling the volatility in the U.S. Treasury has been. One is you haven't had it been the safe haven. We haven't seen the flight to quality and the flight to safety that you would expect given what's happening in the world. The second thing that's equally counterintuitive is you have people talking about Bitcoins, about equity being the safe asset because they've lost confidence in government bonds being the safe assets because of the nature of this interest rate risk. So yes, it should be the safe haven. It should have already benefited, but the reality is that the 10-year yield today is a good 17 basis points higher than it was before this latest conflict erupted.
This is that narrative that we've been speaking about. Now, I know a lot of you are new to the channel, and by the way, shout out to all of my new subscribers. If you're not subscribed and you're watching this video, we do this almost every single day. We've been doing it for about 7 years, and bull, bear, sideways, crab, kangaroo, we're here doing this. But here's the thing. They thought we were crazy when we said that a major company would put it on their balance sheet, and then fast forward, and then we have Tesla and MicroStrategy and all these others, and they never said that a billionaire would buy it, and then you had Paul Tudor Jones and all these other guys coming out, and then they never said that it would be considered a form of actual currency and payment. And then look what El Salvador did. And now it's being talked about in politics, right? They're saying it could actually be a deciding factor of the upcoming election. And on top of that, we also have this new perceived flight to safety. Like Jurrien Timmer said, he's over at Fidelity. They were talking about Bitcoin. And he said that it has characteristics of a commodity currency and likened it to exponential gold, highlighting its aspirations to become a significant store of value and hedge against fiscal erosion. So his expertise illuminated Bitcoin's position alongside gold, especially comparing it to what happened in the 1970s and 2000s, where during these times, when we had inflation and we had real rates turn negative, gold proved resilient, and he believes that Bitcoin is in fact gold 2.0. He also reflected on the decline of Bitcoin and, saying it's crazy how it went from 70 all the way down here. But at the same time, if you look at what happened in the .com, we had a lot of .com boom and busts, right? But you did have things like Amazon and Apple that did in fact come out of it, and Bitcoin clearly, which it is the number one asset really as of right now, the best performing asset of this entire year. So it's pretty hard to argue that. Oh, and speaking about the ETF, here's something you might not have heard, but some of the world's largest market making firms are actually currently right now in the mix to potentially provide liquidity for BlackRock's eagerly awaited Bitcoin ETF. Okay, so what is this all about? Well, you got trade giants like Jane Street, Virtue Financial, Jump Trading, and Hudson River Trading have all held talks with BlackRock about a market-making role, according to BlackRock's slide deck, which was reviewed by the person that obviously broke this story. So, are you guys seeing this? It's like as soon as Larry Fink says it's okay, everybody gets excited and everything is all good again. Oh, not to mention the fact that we also have another spot Bitcoin ETF application, Invesco and Galaxy Spot, which was also added to the DTCC list. So just kind of want to mention all of that as well, right? Now, this is the thing again. So you know how they're going to twist it. There's always some kind of FUD. And eventually, remember Bitcoin mining was bad, right? And then all of a sudden BlackRock gets involved. Bitcoin mining's great. It's amazing, right? Well, we still have this sort of connotation of Bitcoin essentially and crypto being this thing for financing, terror and all this other stuff. And look at this clip about how Elizabeth Warren is basically trying to say, and this is really scary. She's actually, if you listen to her words, she basically wants to make self-custody illegal, pretty much. So if you have a ledger, if you keep your, a ledger or Engrave or a Trezor or anything like that, or I would assume even if you're just using a MetaMask, she wants to outlaw that. But listen to what the person responding actually says to her at the end.
Last year, you wrote that, quote, in their attempt to avoid being traced, illegal actors have adopted ever more sophisticated cryptocurrency technologies such as non-custodial wallets. You wrote that Hamas uses non-custodial wallets to evade detection. Do those wallets pose a particularly high risk of attracting terrorists and other very dangerous people?
Thank you for the question. It is important, perhaps if I may, just to refer to your earlier comments about the funding of Hamas. The major funding of Hamas, unfortunately, the current sanction regime is far from being sufficient, and most of its budget and funds are still going through the traditional channels. And I want to put that clear because crypto is a problem, but this is not the major problem, and we have to look, on other traditional channels like banking and exchanges and money exchanges and cash and so forth. So let's not forget that.
So Dr. Wagman saying what we're all thinking and what we all know is the fact that still the majority of this type of financing is not being done through crypto. In fact, I heard from a source, I'm not going to say that this is a legit source, so let's just say this is a rumor, but from what I've heard, they don't really want to use cryptocurrency because it is traceable and you can find, ways to figure out where it's going. Whereas, still just large sums of cash seem to be the way to go, right? So also, again, though, pointing out some of these bad actors, which this is crazy, by the way. Stick around for this because I think Gary and friends are in some deep water. But as you can see right here, PayPal. has received an SEC subpoena regarding its $156 million market cap PYUSD stablecoin. Now, just correct me if I'm wrong here. What jurisdiction does the SEC have over a stablecoin? Am I out of line here? Am I not understanding the role of the SEC? I thought the SEC's job is to clarify securities and regulate securities. How in God's name is a stablecoin a security? How is it a security? The success of the company depends on the value. It's $1. It's pegged to $1. If I buy it for $1, it's $1. And I anticipate to sell it for $1. And then when I sell it, I get $1. How is that a security? I don't understand. So, coming down here, they say maybe it has something to do with the monthly reserves and the transparency, but Paxos Trust Company, they pretty much are reporting transparently about the amount in the reserves and that they are matched dollar for dollar the same way that, USDC has to do it. So not really understanding this, but here's where things get weird. Here's where it gets weird. So there was this really strange Halloween cryptic post by Gensler. Gary Gensler says, if Satoshi Nakamoto went as Satoshi Nakamoto for Halloween, would we be able to tell? That's just strange right there. Happy 15th anniversary to Satoshi's famous white paper that started crypto. Okay, sounds like he's in support of it. Any crypto companies that are tricking investors should start treating them to compliance with the security laws. Well, they would love to, Gary. They would love to. Except every single time they come to you, you either ignore them or you don't allow them to move forward, right? It's like Hotel California, right? You can check in, but you can't check out, right? Isn't that what Warren Davidson was saying? So this is where it gets crazy. Now, Stuart Alderati mentions that while Mr. Gensler is making bad Halloween jokes on X, his agency is being shamed for ignoring the law that requires agency rules to be reviewed by Congress. Seems the SEC has become the lawless Wild West Gensler loves to talk about so much. Now, what is this all about? Well, they are kind of going outside of their jurisdiction. So, breaking it down real quick, and then we'll get to what the implications are. The SEC was dealt the next major blow in its battle against the crypto industry. At the center of the whirlwind of allegations is an assessment by the U.S. Government Accountability Office, so the GAO, okay? So this was Account Bulletin number 121, SAB 121, and criticism by pro-XRP attorney John Deaton, who pointed out an apparent breach of protocol and possible corruption at the SEC. So this is regarding this SAB 121, which I will get to in a minute. So essentially, this US GAO, Government Accountability Office, is an independent, nonpartisan government agency within the legislative branch of the United States government. I've actually never heard of this before. This is new to me. But, there's so many agencies. It's crazy, right? It's often referred to as the congressional watchdog and serves as a crucial role in providing fact-based, nonpartisan information to Congress, the heads of executive agencies, and the public, right? So Jake Chervinsky, you guys may follow him over on X. He's a crypto lawyer, right? Or at least that's what he's known for. So the GAO reviewed the SAB 121, an illogical anti-crypto account bulletin issued by the SEC in March, and found that it's a rule under the CRA and APA. In other words, the SEC didn't comply with either. This is a clear statement from a federal agency that the SEC has broken the law. The SEC has broke the law. Just let that sink in, okay? Gary's days are numbered here. So, what is this? It essentially required the crypto custodians to double count digital asset liabilities on their balance sheet. It has done extraordinary damage to the crypto industry and cost untold millions in legal and consulting fees over the last 18 months. It was illegal from the start. You know what'd be funny though? Can we see some proof of reserves at the banks? How about that? Wouldn't that be nice to know that my money is in the bank? Oh, I forgot. It's not, because they lend it out. But when they do it, it's fine. It's okay if the banks don't have your money, but we want every single exchange to double and triple count. And, come on. First of all, you shouldn't even be keeping your money on exchanges anyway. I've told you guys that, unless you're actively trading, but that's for another day. The SEC should immediately withdraw SAB 121. If it does not, the GAO's analysis makes a slam dunk out of a lawsuit against the SEC alleging a violation of the APA's notice and comment requirement. So they will be watching this closely and seeing what happens next. So essentially, yeah, okay, at first we didn't really have, they're fining all these celebrities, they're fining Kim Kardashian, and look, The reason why they're able to get away with what they can get away with is by not making clear guidance, they're able to scrape in all this extra money, right? They're finding these guys left and right. And the majority of these, celebrities or exchanges or firms, whatever, they don't care. They'll just pay it. Why? Well, because they have the money, number one. Logan Paul gets hit with $400,000. Okay, I mean, it's a lot of money it's $400,000 is a lot of money. It's like a house, right? Well, I don't know. Yeah, anyway. But so, but for him, he's like, well, I'd rather just pay the 400. Kim Kardashian, I'd rather just pay the 1.2 rather than dragging out these legal battles, right? But on the other side, you have guys like Coinbase and Ripple that have tons of money that are like, no, we don't want to do this. It'd be a lot easier to just pay you, but we need to take you guys to court. You need to be held accountable. And now, not only are they sort of coming out of this gray area, but now, I mean, this is literally breaking the law. This is potentially breaking the law. Okay? So yeah, it is not looking good. Not looking good for Gary and friends. And John Deaton went on, and I know I'm talking a lot about this, but it really pisses me off. It pisses me off that you have these 5 delinquents, and I mean, I guess Hester Pierce and her friend is cool, whatever. But yeah, these 5 people, namely just this one dude, Gary Gensler, protecting investors. All the scams that have happened, right? Gary's meeting with FTX, right? He's meeting with Sam Bankman-Fried, yet won't answer Brian Armstrong's phone calls for 2 straight years. Something's not right here. Something is not right here. So John Deaton emphasized, ever since the Ripple lawsuit, the SEC has consistently not followed the law. A federal judge literally stated that the SEC's enforcement, lawyers, and the leadership they report to are not only hypocrites, but they lack a faithful allegiance to the law. It was an incredible statement for a federal judge to make. And Deaton also asserted that the GAO's assessment is further evidence that the SEC is riddled with corruption. Here's what I can say with great confidence. Today, the SEC does more to hurt investors than it does to protect them. He went on to make an even bolder claim, stating that the SEC has become both an inept and corrupt organization, full stop. And I could not agree with him more. And, just really quick before we get into the charts, I wanted to point out, this came out from UKTN, and this is Sue Carpenter over at Crypto UK. And, they say that the government must intervene to ensure banks work with crypto firms after several financial institutions recently enforced bans, right? And why are they doing this? Well, they're doing it because they're scared, right? They're scared, right? If you think about it, the newspapers were scared of, the television or whatever. And, the old saying, the horse and buggy guys were scared of the automobile, right? Because these types of changes, Netflix, Blockbuster, right? All that stuff, right? They don't want change, and they realize that it's taking the power and it threatens their traditional system. But inevitably, they're going to have no choice. So she called for banks, with their risk-averse approach. We acknowledge that crypto can be considered a source of fraud, but there are a lot of other areas that also bring this fraudulent activity. Getting back to the stuff that, Elizabeth Warren was talking about, labeling all fraud that takes place this way as crypto isn't necessarily correct. A fraud and a scam is a fraud and a scam, however you're looking at it, right? It could be done with dollars. It could be done with freaking Beanie Babies, right? Back in the 90s. You guys see that movie, The Beanie Bubble? It's pretty interesting. But Crypto UK has argued that in cases where banks are choosing to ban crypto outright, the government should be willing to intervene to facilitate cooperation between traditional financial institutions and crypto firms. So she says it is now on the government to intervene and force both sides of the fence to come together and find ways to de-risk crypto transactions. So Pandora's box is open. It is inevitable. So that being said, let's hop in. Let's have a look at the charts. Again, not really too much crazy TA. That's why I really haven't been going too nuts on it. Obviously, I mean, this to me is the chart. I mean, we had a breakout of literally a downwards parallel channel that lasted for almost 2 years. And we had, broken out of all of these major moving averages. So, I mean, yeah, on the weekly chart, guys, which is a larger time frame, looking very, very good. And what's interesting is that you actually have a look at the Bitcoin futures, and the CME futures is actually predicting that Bitcoin should probably continue to the upside. Of course, you can see we closed this gap, but we are hanging out in this area. Now, this area is obviously a very important resistance level that we've spoken about for quite some time. And the other thing, too, is that we've actually formed, and if you kind of get take this little outlier out right here, you can argue that this is essentially a parallel channel that's also forming to the upside, right? And we are being rejected from the top of that channel. So could we pump straight through it? Probably. There is something that I have been looking at that's been giving me really, really good trade opportunities. But as of right now, if we were to retest down to the heartline or something like that, maybe even retest around 28,005, which I know if we went back down to that level, everybody would say, oh, that's it. We're back below 30K. But again, these are all psychological numbers. 30K doesn't really actually mean anything. Well, I mean, it kind of does because we have, but even if you're looking at this major right here, that's more around 32 to 34, which is where we're at right now. 30,000 in and of itself really isn't that significant of a level. But interestingly enough, if you actually look at the 2-year moving average, like Bit Harrington said, he says Bitcoin has left the lake, which is basically anytime underneath this average, right? So anytime you're underneath the 2-year, it's generally speaking amazing opportunity for accumulation, and above the 5x, which is up here, is usually where you're getting really, really heated up. And you can see right here, we've kind of broken out of that area. So, are these bears really going to get these opportunities? I mean, the next area of resistance is around 37,200. And, if you were looking to pull back, you can have some support at around 32 or even come all the way back down to 29 again, and once again, having a look at these major upwards trends, we've never really confirmed on it yet. So, but obviously, if we continue to go sideways, the trend gets higher, which means the fall could be lower, right? So the longer it takes for us to have a pullback, the higher the number or price would be, right? So the longer it takes, the longer we stay at these levels, the less chance these bears are going to get these levels. And I mean, can you imagine this right here and see this area right here that I've highlighted, this white area, which you can see right here. This was the weekly top, right, back in 2017. It also had this consolidation here. It also acted as support and resistance down here, okay? Now, you're telling me that going all the way back to 2017, this critical level, you're telling me that we're just going to fall below that? I don't know where these guys are getting their analysis from. It's just, I mean, maybe it's just like for attention. Maybe they're just like trying to get attention. I don't really know why. There's nothing in this that shows that Bitcoin would ever go back down to those levels again, including the fact that you have this insane amount of volume profile right here. I don't see it. And now that we're accumulating in these levels, you're starting to build a foundation around 27 as well, with the major around that 23.5, 23.5, yeah, right here. So I just don't see it. And CryptoCon, now I guess I'm assuming this is called the Fisher Transform. I don't know. It kind of looks like a bit of an RSI type of a thing. I'm not sure what this indicator is, but nevertheless, just based on this data, as you can see, the most important breakout for the cycle has just occurred for a rare second time this cycle. So they go on to say, not only does this typically spell good things to come in short term, but it also makes the beginnings of all the largest historical moves. And I mean, you can pretty much see it right here, right? As soon as we break the downtrend, look at this right there, right? High point, break the downtrend right here. Look at all these signal flashes. What happens? Price continues to the upside, And something that I'm looking at, which if you guys are looking to trade, you guys know that I do have tutorials above and all that other stuff, $66,000. They're all free. I don't charge for anything. But as you guys can see right here, this is this market cipher indicator, which I love in these upswings, has been absolutely killing it. I mean, in a nutshell, you can obviously trade the you could trade these patterns, these anchor trigger waves. But what's crazy is if you look back here, we had this big green dot, right? Which generally, could mark bottoms and stuff like that. And for the most part, it's been pretty freaking accurate. But what's even more insane is if you waited for the green dots up here, not the lower ones, but the ones that show up actually in the flow, the waves themselves, excellent confirmations. So, I mean, if you're not using Market Cipher, I don't know, guys. I mean, I'm not trying to shill this, but this thing has been dead on. And I mean, pretty much if you just wait for another wave down here and you get confirmation on the weekly, so you get a big green on the daily, secondary on the weekly, then, I mean, literally all the trades have been completely profitable if you took them. And, as you guys can see right here, just pointing this out, look at this trend that we have. Do you see these waves? Do you see that trend? I mean, guys, coming out of the red, money flow going into the green, I really don't know what else to say except for the fact that, Bitcoin is in fact bullish. So, Yeah, gone on a little bit too long today. Getting back into the long videos, guys. Remember the long videos back in the day? So that is it for me. Thank you so much for coming back to the channel. If you made it all the way to the end, I can't believe you actually sat here and listened to this crazy guy on the internet for that long. But if you do enjoy these types of videos, we do make these as frequently and often as necessary. And I'm very happy to see you here. So I hope you're having a wonderful day. Obviously, nothing goes up in a straight line. So, you know, it's not impossible. It's not impossible to see a slight correction. But I do believe that we are in the stages of the bull run where you may want to start getting a little bit nervous because those dips, they're going to come, but they're probably not going to bring you the levels that you're looking for. I would be very shocked if we went below some of those critical levels. I'd be very shocked. So that's it for me. Thank you for coming back to the channel. You guys rock. You're the reason that I make these videos. If you do want to learn how to trade, be safe. If you want to be responsible and profitable, I highly recommend you check out my free tutorials. Also, bonuses below, check out Market Cypher, all that stuff. Until next time, guys, stay crypto, and of course, peace out.